I'm Sarah from Embark Tax Services, and this video will explain how private health insurance and the Medicare Levy Surcharge works. Well, it's June, and now the private health funds start running their scare ads, telling everyone that if they've got private health insurance, they could save money on their tax. But this isn't 100% correct. If you and all of your dependents do not have the appropriate private health cover, and you earn over a certain threshold, then yes, you will be charged an additional tax, which is called the Medicare Levy Surcharge, or MLS. So just to confuse the situation, there is actually already a charge called the Medicare Levy. Now, Medicare gives all Australian residents access to healthcare, and it's partly funded by taxpayers who will pay a levy of 2% on their taxable income. Now, this is across the board for all taxpayers, although there are reductions for low-income earners and others will qualify for exemptions. But the Medicare Levy Surcharge is additional, and it's designed to reduce the demand on the public Medicare system. So you're going to be required to pay the surcharge if your income for surcharge purposes is above the threshold, and you or your dependents do not have an appropriate level of private patient health cover. This will apply unless you are exempt from paying the Medicare levy and your dependents are also exempt, or they have the appropriate level of private cover. Now, the private cover level that you require is hospital. So who is a dependent? Well, a dependent means an Australian resident you maintained who was your spouse, your child under 21 years old, or your child aged between 21 and 24 years old who was receiving a full-time education at a school, a college, or a university. The base income threshold for singles is $90,000 and for families it's $180,000. Now, the level of private health insurance you need is hospital cover, and for singles you must have an excess of $500 or less, and families must have an excess of $1,000 or less. Now, general cover, which is known as extras, is not considered private patient hospital cover. It covers items such as optical, dental, physio and chiropractic treatments. Now, you can have this cover, but it will not reduce the Medicare Levy Surcharge. The calculation is based on your taxable income plus reportable fringe benefits, income investment losses which are added back, reportable superannuation contributions, and exempt foreign employment income. Meet Bob. Bob has $80,000 in taxable income, which includes a $15,000 loss on an investment property and $10,000 in reportable fringe benefits. His income for MLS calculations is $105,000, which is $80,000 plus the $15,000 plus the $10,000. Now, say Bob's married to Alex and they have 2 dependent children. Alex's income for surcharge purposes is $80,000. So their combined income for the surcharge is $185,000, but their family threshold is only $181,500, which is the $180,000 plus the $1,500, because there's an additional $1,500 that you can add each dependent child after the first. So to have 2 children, then they get an additional $1,500 onto their threshold. They would then be required to both pay an additional 1% of tax. If they had private health insurance on the 30th of June, which is the day they got it, they would only be covered for 1 day of that financial year, but they would still be required to pay levy on the other 364 days. If you require further information, you can visit the ATO's website, www.ato.gov.au. Alternatively, you can email your query to us at info@embarktax.com.au. If you need to call us, our number is 03 9727 5811.